Hey everybody, welcome back to Sip and Talk. I'm Joe. And as always, I'm ready to dive into some seriously juicy info with you all today. It's like we're mixing up a knowledge cocktail here. Strong stuff, but oh, so smooth going down.
And I'm Sunny, your friendly neighborhood fact checker. I'll make sure we get all the ingredients right. Speaking of mixing things up, you know it's always a good blend? Travel whiskey and discovering awesome new things. You have to check out our friend Micky's YouTube channel, Mickytolife.
Yeah, Mickey's the best. He's always got something cool going on.
Ready to tackle some more big ideas, you know?
Yeah, always exciting to see what you've dug up.
Oh man, you are not going to believe what happened.
What'd you get into?
So, you know I'm trying to be like a responsible adult, right?
Mm-hmm.
Finally decided to tackle that overflowing recycling bin.
The bane of our existence, right?
Oh, tell me about it. Let's just say a rogue gust of wind
Oh, no.
turned my entire driveway into like this confetti explosion of cardboard and plastic bottles.
Oh, my God.
My neighbor, bless her heart, was just standing on her porch, coffee in hand,
Just watching the show.
watching the whole chaotic ballet unfold. I swear I saw her mouth the word epic.
That's amazing, the simple joys of suburban life.
This is something else.
Mine's been a little bit less visually traumatic, but I finally perfected my sourdough starter.
Ooh.
It's bubbling away, just like I hope we will be with today's topic.
Speaking of bubbling, the financial world is definitely doing its own version of that. Maybe a
Yes.
little more nervous bubbling, though.
A little bit, yeah.
You dropped a stack of articles on me this week with titles like Tariff Tsunami Hits Global Markets,
Oh, yeah.
Trump's Trade Gambit, Will Investors Get Washed Away?
Pretty dramatic.
So no prizes for guessing. We're diving headfirst into President Trump's brand new reciprocal tariff policy today.
Yeah, April 2nd, 2025, trade landscape shifted, I think, pretty dramatically.
Okay, reciprocal tariff sounds very official.
It does.
Break it down for us, regular folk. What's the deal?
Okay, so basically, the U.S. is putting this minimum 10% tariff on basically everything coming into the country.
Okay.
But the reciprocal part is that if another country charges us higher tariffs on American goods,
Right.
we're going to hit them back with higher tariffs too,
Yeah.
but roughly half the rate that they're charging us.
Okay, so if someone, country X slacks a 40% tariff on something we're selling.
Right. We're going to slap them with a 20%.
Gotcha. So like a measured retaliation.
Yeah.
So give me some real world examples. What are we talking about for some of these big economies?
Okay, so China's looking at a 34% reciprocal tariff, EU 20%, Japan 24%, Taiwan 32%.
Wow.
The UK, with their generally lower tariffs, is at that 10% baseline. India is facing 26%, Vietnam, pretty hefty 46%. And then Canada, specifically on oil and gas, is also at 10%.
46% on Vietnam, 34% on China. Those are some serious numbers.
Yeah.
So what is the thinking behind all this? They called it Liberation Day. What's the big picture goal?
So they've laid out a few goals: shrink the U.S. trade deficit, obviously generate revenue through these tariffs. They would then maybe go to lower domestic taxes.
Okay.
They want to incentivize American manufacturers to bring their operations back home,
Right.
and then ultimately make a dent in the national debt.
Ambitious. So the minute this news dropped, did the markets just kind of yawn and carry on, or what happened?
No, not at all. Big reaction from the markets.
I figured as much.
Yeah, we saw pretty significant drops across all the major stock market indices. S&P 500, Dow Jones, NASDAQ all took a hit here in the U.S. Wasn't just us, though. German DAX, UK's FTSE 100, French CAC 40. All the major markets across Asia saw declines as well.
Wow. So a truly global reaction.
Yeah, and one of the articles pointed out that the S&P actually saw its biggest single-day drop since 2020.
Ouch.
Yeah, so that kind of gives you a sense of the level of anxiety that's out there.
Yeah, I mean, that is a pretty big sign that people are worried.
Yeah.
So what did you see happening? Where were people starting to put their money if they were pulling it out of stocks?
Yeah, so we saw that classic flight to safety investors selling off riskier assets like stocks,
Right.
moving their money into those more stable investments, gold, government bonds.
The oldies but goodies.
Yeah, exactly. And that's a pretty strong indicator that there's worry about, potential slowdown or even like a full-blown downturn in the global economy.
Okay, so this has definitely sent some ripples through the markets, but this isn't the first time, the stock market's taken a hit.
Oh, definitely not.
I think it's helpful to look back at some of the big historical market crashes.
Absolutely.
Just to kind of get some context for, what might happen next.
Yeah.
You've compiled some data on past S&P 500 downturns, right?
I have, yeah, because looking at history can give us a little perspective, but we have to remember every situation is different.
Of course.
But let's start with the big one. 1929 Wall Street crash.
Okay, the granddaddy of them all.
Yeah, that initial drop was around 40%, and that was in about 3 weeks.
Wow.
But it kept going. It didn't stop there. It eventually reached an 89% loss by 1932.
Oh, my goodness.
Yeah, so it took about 20 days for that initial bounce-back attempt, but a full recovery took 25 years.
25 years.
Yeah.
That is a sobering thought. Okay, let's jump ahead a little bit. What about 1987 Black Monday?
Yeah, Black Monday, pretty dramatic, about a 25% plunge.
Yeah.
But that was in just 2 trading days.
Yeah.
Recovery for that one was much faster, around 2 years to get back to pre-crash levels.
Okay, so much quicker turnaround. Yeah. What made those two situations so different that one took decades and the other one was just a couple of years?
Yeah, well, 87 was kind of seen as more of an isolated event.
Right.
Maybe because of how trading worked back then.
Right.
But the underlying economy wasn't as messed up as it was in 1929.
Right. So the foundation was still okay.
Yeah, you didn't have the bank failures and the deep economic malaise that came with the Depression.
Makes sense. Okay, and then, of course, the dot-com bubble bursting around 2000. That felt more like a slow leak than a sudden break.
Totally. Yeah.
Yeah.
That was a decline of about 49%, but it was over like a 30-month period, so much slower.
Okay.
And the recovery from that one took around 7 years.
Okay.
Because it was all about, the speculative bubble with internet companies, and it took time for the economy to kind of adjust and for new areas of growth to emerge.
Right. Then 2008, the financial crisis. I mean, yeah. I remember that so vividly, just the sense of panic.
Yeah, that was a rough one. S&P 500 dropped about 57%.
Wow.
And that was over about 17 months, a little bit longer.
Okay.
Triggered by that whole collapse of the housing market and then the credit crisis, and that recovery took around 6 years.
Oh, man. And then 2020, the COVID pandemic crash. That was incredibly sharp but remarkably short recovery.
Yeah, that initial drop was about 34%, and it happened in about a month.
Yeah.
But then the recovery only took 5 months to get back to pre-pandemic levels.
Yeah, that was surprisingly quick.
Yeah, and a lot of people attribute that to that quick and significant, policy response from governments and central banks around the world.
Makes sense. So looking at this whole historical roller coaster, it seems like, the speed of a crash and the duration of the recovery are kind of all over the map.
Yeah, for sure.
Is there any sort of takeaway that we can get from this?
Well, it seems like those quicker recoveries tend to happen after a very specific event.
Okay.
Where the economy overall is still pretty healthy.
Right.
And you have strong and quick action from policymakers.
Right.
The longer downturns, like 29 and 08, tend to be tied to these bigger systemic problems in the economy that just take longer to fix.
Right. And it doesn't seem like the steepness of the initial decline always tells you how long it's going to take to recover.
No, not at all.
Okay, well, that gives us at least some historical context as we try to figure out this whole tariff landscape.
Yeah.
But let's zoom out a little bit and see what the rest of the world is doing. How are different countries reacting to these reciprocal tariffs? Because it doesn't sound like everyone's exactly thrilled.
No, they are not. And the responses have been pretty varied.
Okay.
Some are retaliating right away. Others are taking a more, measured approach, hoping for negotiation.
Okay, let's start with China, because they seem to have come out pretty strong.
Yeah, they did not hesitate. They announced retaliatory tariffs matching us 34% on all U.S. imports.
Wow.
Effective April 10th. But they didn't stop there.
Oh, boy.
They're also restricting exports of rare earth materials.
What are those?
So those are things like samarium, dysprosium.
Yeah.
They're essential for a lot of high-tech manufacturing.
Oh, wow. Okay.
On top of that, they've launched anti-dumping investigations and an anti-monopoly probe targeting DuPont China Group.
So they're hitting back on multiple fronts.
Oh, yeah.
Okay. What about Japan? They're a huge player in global trade and manufacturing. What are they saying?
Well, they've expressed disappointment.
Yeah.
They're emphasizing that they're going to thoroughly examine the impact on their industries, their employment.
Okay.
And the government is considering economic stimulus measures to help those businesses that might be affected.
Okay.
They seem particularly worried about the potential tariffs on cars and auto parts because that's a big export for them to the U.S.
Yeah, definitely a key area. What about Taiwan, especially given their role in, the whole global semiconductor supply chain?
Yeah, they've been very vocal.
Yeah.
They've said that 32% tariff is highly unreasonable.
Okay.
And they're planning on going right into negotiations with the U.S. Their goal is to protect those semiconductor exports.
Okay.
But they're also considering addressing, non-tariff barriers in their trade relationship. And they might increase their imports of U.S. energy as part of that negotiation.
Interesting. Okay, so direct engagement and potential trade-offs for Taiwan. What about the UK? They're facing that 10% tariff.
Yeah, they're being very British about it. They're assessing the economic implications.
Okay.
No immediate retaliation as of now.
Yeah.
But they are worried about the potential negative impact on their export growth.
Yeah.
And Jaguar Land Rover, they actually already announced that they were temporarily suspending their U.S. exports back in April because of that pre-existing 25% import tax on cars.
Oh, right.
So this new tariff just adds another layer of complexity for them.
Yeah, insult to injury.
Yeah.
Okay, EU 20% tariff. They've always been pretty assertive when it comes to trade matters.
Yeah, they're not messing around. They're preparing countermeasures if those negotiations with the U.S. on the 20% tariff don't go anywhere.
Okay.
They're considering stricter regulations on U.S. tech companies in Europe.
Okay.
Maybe tariffs of their own on U.S. steel and agricultural products.
Okay, so textile, agriculture. Those are some big targets. Moving on to India, 26% U.S. tariff. What's their response?
Well, so far they haven't announced any plans for counter tariffs.
Oh, wow, really?
Yeah, they're hoping to get exemptions through trade negotiations. They've also pointed to the fact that they recently reduced their import taxes on some U.S. goods as a sign of goodwill.
Okay, so they're playing it cool for now.
Yeah, but analysts are saying these tariffs could still slow down India's economic growth overall.
Yeah, that makes sense. Okay, what about Vietnam? 46% tariff. That's a huge one.
It is, yeah. They've expressed regret over that,
You bet.
emphasizing the need for dialogue and negotiation.
Okay.
But they're expecting a big impact on their electronics, footwear, and seafood exports.
Yeah, those are some key industries for them. Okay, Canada, our neighbor, major trading partner.
Right?
They're already dealing with some U.S. tariffs. How are they handling this new layer?
They're in a tough spot because they've got those existing tariffs on steel and aluminum from the U.S.
Right.
And now they're facing this threat of tariffs on automobiles.
Right.
And the auto industry between the two countries is so interconnected.
Yeah, for sure.
It's very likely that they'll retaliate with their own tariffs.
Right.
And there's a lot of concern in Canada about disruptions to that industry.
Yeah.
And they're even warning about the possibility of stagflation.
Stagflation, what's that?
So that's like a combination of slow economic growth and rising inflation.
Oh, that sounds bad.
Yeah, and potential job losses.
Okay, so some serious economic worries. What about some of the smaller, more trade-dependent economies like Singapore, for example?
Well, Singapore actually, their direct exposure is pretty limited because they have a trade deficit with the U.S.
Okay.
But there could be indirect impacts on their chemicals and pharmaceutical sectors,
Okay.
primarily because of their trade ties with the EU, and the EU is facing their own tariffs.
Right. So it's all connected.
Exactly. Even without those direct tariffs,
Yeah.
Global trade is so interconnected that they can still feel it.
Yeah, it's like a big global Jenga tower.
Exactly.
If you pull out the wrong piece, the whole thing comes tumbling down.
Yeah.
Okay, what about Brazil?
So Brazil is not planning any immediate retaliation.
Okay.
They're hoping that dialogue can prevent things from escalating,
Okay.
but they're also seeing this as a potential opportunity.
Oh, how?
They think it might actually speed up progress on their own trade agreements with South America and the EU.
Okay, so trying to find a silver lining.
Yeah, exactly.
Okay, what about Hong Kong, major global trading hub?
Yeah. They've said they're not going to follow China's lead with those counter tariffs.
Okay.
They want to stick to their free port policy.
Okay.
But they were warning that there could be some significant indirect impacts on their economy because of all the disruption to global trade.
Right. Okay. And then we had Zimbabwe's response, which I have to say was a little bit surprising.
Yeah, a bit of a curveball. They actually suspended all import tariffs on U.S. goods.
Wow, really?
Yeah, they said it's an effort to promote trade and to try to get some relief from those existing sanctions.
So going in the complete opposite direction.
Yeah, they're trying to make friends, I guess. But some people have criticized that move, saying it undermines, regional solidarity.
Okay, so definitely an outlier. And finally, South Africa.
South Africa is planning to diversify their export markets.
Okay.
They want to reduce their reliance on the U.S. market.
Okay, so a real mix of strategies and reactions across the globe, retaliation, negotiation, hoping for the best, shifting focus. I mean, it definitely feels like the risk of a global trade war is getting bigger.
Yeah, I mean, a lot of analysts are looking at this as a real shift away from, how global trade has worked for decades.
Right.
One report even said that this could be the end of the American era in global trade.
Wow, that's a pretty dramatic statement. Okay, so we've looked at the history. We've seen how the world's reacting. Now for the big question. What should investors do? You've been looking at some of the advice that's out there. What are the key strategies people should be thinking about in these kind of uncertain times.
Yeah, so a few things keep popping up, but diversification is key.
Right. Don't put all your eggs in one basket.
Exactly. And that means, including things like gold and government bonds, those safe haven assets, things that tend to hold their value when the market is volatile.
Okay.
Another suggestion is to focus on those domestic companies, especially the ones that don't rely so much on imported goods or those complicated global supply chains.
Okay.
Because they might actually benefit if those tariffs, reduce competition from foreign products.
Right. So businesses that are making and selling things primarily within the U.S.
Exactly.
Okay.
On the flip side, it's probably a good idea to be cautious about those industries that are super dependent on imports.
Right.
Like technology, electronics, consumer goods. Those could be facing rising costs.
Right.
Which could impact their profitability.
And I imagine those higher costs often get passed on to us, the consumers.
Yeah, that's a big concern. A lot of economists are worried about increased inflation as the cost of imported goods goes up.
Right. Right. And then, of course, the classic advice, patience, and a long-term view.
Yeah, exactly. The market reactions to stuff like this can be really volatile in the short term.
Yeah.
So don't make any rash decisions. Think about your long-term financial goals and just see how this whole trade situation plays out.
Right. Ride the wave. But it sounds like there's a lot of debate about how big and long-lasting these consequences could be.
Oh, yeah. There's a lot of concern out there.
Yeah.
Some people are really worried about stagflation.
Right.
Which we talked about, that mix of slow growth and high inflation. Some people are worried about the damage to international alliances and the potential for, negative long-term impacts on the U.S. economy.
Okay, so the idea is that this is all kind of a trade-off, short-term pain for a long-term goal that's not guaranteed.
Yeah, and some are worried that, even if the goal is to bring manufacturing back, the reality is that it could actually lead to higher costs for American businesses.
Right.
Which could then hinder growth.
Okay, well, what's the counter-argument? What's the Trump administration saying about all these potential downsides?
Their message has been consistent. They're saying this short-term pain is necessary to get to greater long-term economic security and to revitalize American manufacturing. They believe that these tariffs will eventually strengthen the U.S. economy because it'll encourage domestic production and reduce our reliance on those foreign supply chains.
Okay, so we've covered a lot. Let's try to summarize. What are the key takeaways from all this?
So President Trump's reciprocal tariffs, they've definitely created a lot of uncertainty in the global economy.
No doubt.
We've seen a lot of different reactions from around the world.
Yeah.
Retaliation negotiation. Some countries are just hoping for the best, and some are shifting their focus.
Right.
All this has caused a lot of volatility in the financial markets.
Yeah.
And what we're seeing kind of echoes those past market downturns. But, each one of those was unique.
Right.
So for investors, the main message seems to be prepared for the long haul and, really think about making some strategic changes to your portfolio to deal with this new economic environment.
Okay, so as we wrap up this deep dive, here's a final thought for everyone to consider. Given all the history we've talked about and all the reactions we're seeing, how might this new era of trade really reshape the global economy in the years to come?
That's a big question.
Yeah. What unforeseen opportunities or maybe more likely challenges might pop up for investors as all this unfolds? It's a situation that deserves a lot of attention.
It does. Yeah, the consequences could be much bigger than just what we see in those trade figures.
Absolutely. And speaking of things that deserve attention, who else is doing really cool stuff?
Who that?
Our good friend Micky.
Oh, yeah.
You got to check out his YouTube channel, Mickytolife. He's got great travel vlogs, some seriously tempting whiskey and alcohol unboxings, and some fantastic background music if you need a soundtrack while you're pondering the future of global trade.
I love it.
It's called Mickytolife. Go show him some support.
Awesome. Always good to support friends doing cool things.
All right, well, that's all the time we have for this deep dive. Thanks so much for joining us, and we'll see you on the next one.
See ya.